listening to Multifamily with Mosley. In today's episode, our host, Todd Spitalny, and our special guest, Matt Sugg, Professional Development Manager and former Asset Manager, will be discussing how to determine your project needs from the start of renovation. Let's listen in.
So today on the podcast by Multifamily by Mosley, we've got Matt Sugg here today joining us, who's actually our Business Development Manager down in Richmond, but he's got an interesting background we kind of want to talk about today, because I think that one of the reasons what attracted me to hiring you and pursuing you was your background. And I want to dig into that because I think our listeners today would absolutely love that. So Matt, give me a little bit about your background.
Yeah.
Share with the guests what there.
No, of course. First off, thanks for having me on today. Appreciate it. So it's funny how I got into property management. Started back in 2007. Actually, when I graduated Virginia Tech 2005, went into retail management for about a year and a half. Decided retail was not for me. And I decided to look on an ad on Craigslist. I don't even know if people use Craigslist anymore, but it was a manager and training position for PRG Real Estate.
Gotcha.
It was a property based in Richmond, Virginia. Went in there, got hired on the spot. I was a manager in training, a leasing consultant, marketing director, business manager, assistant manager, property manager, and even a district manager. Kind of worked my way up the ranks over a course of about 6 years. And then I was recruited by a company down in Virginia Beach to help out with a startup company as a portfolio manager, overseeing several of their assets, owner-managed assets, and also third-party deals all over Hampton Roads and Richmond as well. And from that, I was recruited by another company to be a regional manager, regional director, asset manager for a couple of the large firms all over the country. So
that's kind of where I want to dig in a little bit, right?
Yeah.
That last part, that asset manager side, right? One of the things, one of our challenges that we face all the time in our market is when we're talking to asset managers, we're talking about potential projects, understanding how a project gets developed, what gets determined that we're going to do. Those are the things that we kind of want to dig into today, right? It's like, help me understand how, as an asset manager, you determine what needs to be done for a project.
Sure. So it kind of depends, right? You have certain investors and owners have certain goals, right? You have your short-term holds, 5 years, they're going to go in there, flip it, sell it.
Right.
Or you have your long-term holds, which are typically the owner-managed assets. So it really depends on the strategy. You're going to go in there for a typical value-add deal. Let's say, for instance, you go and look at a C deal or a Class B deal. You go in there, do the renovations, and you want a certain ROI, right? Mm-hmm. You're going in there, you're setting a pro forma, you're basing what you're going to do, your strategy based on that pro forma, essentially.
Explain. It's like, I know a lot of people, when you say pro forma, they don't understand what that means, right?
Yeah.
So explain to me and our listeners what the pro forma is.
Sure.
How do you describe that?
So let's say, for example, you're doing a due diligence, right? An acquisition, you're taking over a property, essentially. Right. So you go in there and let's say your asset manager, your owner and investor, and whoever else is involved with that, they set a guideline. It's almost like a budget, per se, to say, hey, these are the numbers we want to hit when we take over this deal. This is the guideline. You guys got to hit this guideline. Whether it's a third-party deal takes over, that's a pro forma they're working off of. Doesn't mean the numbers always work, obviously, but that's kind of the guideline that they want to set.
Right.
So it's really just a budget set in place before we take over a deal.
Right, and is that budget based on, that, like, I'm going to sell it in 7 years, right? I know I'm going to get rid of the property. I'm going to hit my target, right? That pro forma, that budget is based on a target sale number that they've already predetermined during the process, or is that something that, based on performance, they're going to create that number? Where does that number come at?
A little both. I mean, so it obviously depends on your marketing conditions, right? And the cap rates that are going for at that time too. So it kind of goes back to that. So it really just depends on where the market is at that time. But yes, owners typically have a goal set in mind when they're trying to sell a property.
Right.
Your average rate of return, you're trying to at least get 15 to 18%. That's a healthy return.
Right.
Doesn't always happen, but that's kind of the goal, the target.
And right now, I think that an 18% return right now is actually quite low, considering the market conditions.
Over the last year, absolutely, yeah.
It's funny when you listen to guys like Grant Cardone and those guys like that. They're talking about the potential boom coming here in the next 6 months, and if you want to purchase properties. Interest rates, it doesn't really matter what the interest rate is. To be honest, it doesn't even matter what the cap rate is anymore. Because if you're able to get your rents, you're able to get those things. What does it matter when you buy it?
Exactly.
You're going to get the return. You're going to make your profit.
Yep.
And ultimately, the responsibility is the investor anyway. So That's great. So, like, and what we want to kind of dig into a little bit more on is how that decision gets made to I want to renovate versus not renovate, or what I want to renovate versus what I don't, right? That's always kind of a question. And we bump into guys all the time, and they're like, wow, we're not sure what we want to do yet. Like, you bumped into someone the other day, and like, I have no idea what I wanted to do.
Yep.
I have no idea what I should put
Happens
in
all
here.
the time, yeah.
Like, I don't even know what, I'm going to renovate, but I don't know what I want to renovate, right?
Yep.
Well, okay, well then so the next question that I always ask when I hear that, which I hear a lot, what is your goals?
Yeah, exactly.
Right? What is your goals? My first question is, and I always ask, are you doing this because you're going to sell it in 7 years? You want to hold it for 7? Or are you trying to just upgrade it because you need it? Or are you trying to upgrade it because you're trying to increase your asset value and your revenue every month? What is your goal? Because there are guys that ultimately just have to do what we call maintenance renovations. Just to maintain the property, because that's all they want to spend.
Exactly.
And they're usually looking at an ROI of about 3 years. In that ROI, you're talking about cabinets, countertops, appliances. That's all I want to do. Obviously paint gets done on every turn. There's a different level of paint level that we do from turns to renovations. We understand that. Then there are the guys that we want to look, hey, we really want to improve this. We want to get an extra $150, $200 a month of rent. We want to increase the entire asset value as well as, improve. Or, and this is where the fun one comes in, right? What happens when they're building 3 brand new buildings right next door?
Exactly, which is happening everywhere right now,
Right.
especially in Richmond.
Right.
There's new developments going up left and right. They got over 5,000 units in the pipeline over the next couple of years, and it's just going to keep on going up.
Well, and absolutely, and we know that Virginia is dumping $120 million into affordable right now through government projects. We know that's happening. We see it. We understand it. But the same token, most of the people in Richmond don't qualify for that affordable, so they got to find a place to live. But if you're telling me that I'm going to pay $1,200 for a 2-bedroom right now in Richmond, which, by the way, up here in Northern Virginia, that's $3,000.
Yeah, there's no way.
Let's be clear the difference in the marketplaces here. But we're talking about that $1,200. I want brand new cabinets, I want brand new flooring, I want this, I want that. Because I go to the new building here.
Yeah.
Or I go across the street, I might get an extra 150 square feet more. But I got old metal cabinets, I got stainless steel appliances, I got old rusted out appliances. Which one are you going to spend on? Right?
Yeah.
And that's the tough thing that we keep bumping into. It's how does that decision get made?
Yep.
How does that decision get made as to when and where that comes along in the process?
Well, there's a few things, really. You got to look at your market first, right? You got to understand your competitors. At the end of the day, you've got one building, you got 20 of them around you just like that, right? What differentiates you from the competition? So I think you have to understand your sub-market, understand what your competitors are doing, really understand from a granular standpoint going into those units and why are people leasing there versus when they can lease with you. So you've really got to first understand your sub-market and all your competitors first to determine what do people really want right now. Do they want an extra large living space? Do they want extra amenity space? Especially right now, over the last year, we've seen a shift from a lot of residents going from urban to suburban markets, obviously due to the COVID situation that happened a few years ago. We're now starting to see a reversal there now, though. We're seeing more people from suburbs going back into the urban markets, so we're seeing those rents increase in the urban markets. And suburban markets are still obviously increasing too, because demand's there, right?
Right.
Housing, is, as we all know right now with the interest rates, is not the most affordable option for most people, so they still have to live in apartments, right, at the end of the day. So the demand will always be there, will continue to be there over the next, several quarters. So.
And you bring up a great point, right? Because in our marketplace, the best thing that happens to our industry when we're talking about apartments is when the housing market's booming, costs are skyrocketing, interest rates are high, people can't buy.
Yep.
We want them living in the apartment. And then we gotta see the offset when it starts to drag a little bit and the prices come down, interest rates lower. We start people, no, you gotta buy, right? Like right now is a perfect time for us in the marketplace, but there's a dichotomy right now that's happening with the interest rates and the cost to do business, the cost of materials, the delays on material, all those things are where we normally would be booming. We're struggling in our marketplace because we can't get materials, can't cost it doesn't work. And that's another thing we want to kind of hit on a little bit is that cost difference. We have people that 5 years ago were doing a $12,000 renovation. That same renovation today is $18,000, $20,000 for the exact same material.
Yep.
But the cost is there, and now the needs are much higher because deferred maintenance wasn't done. We're seeing these things all over. So when you're talking about, as a former asset, and I want you to keep that asset manager hat on today for me. Yeah?
Okay.
You know, as you're developing that project, where do you expect most of your return to come from in that renovation?
Great question, Todd. So I think first off, the kitchen.
Yep.
People spend most of their time in the kitchen. They want that to kind of be their entertaining space, right?
Mm-hmm.
They want it to look nice, presentable. So those granite countertops, the quartz countertops,
Right.
the nice cabinets, the soft close doors. Those things go a long way. And I think flooring. Everybody wants the nice LVT or LVP right now. Nobody wants carpet opposite. Everybody knows that.
Right.
But I think just having that open space, a lot of natural light, right?
Right.
So that's obviously one thing too for entertaining. People want that natural light. And you want to have that outdoor space. I think, again, that's a big thing we've seen shift over the last couple of years. A lot of investors right now are spending a lot of money on nicer outdoor amenity spaces.
Right.
I think we'll continue to see that. And that's kind of why people left, the urban markets to go to suburban markets. So
Right.
I think we'll continue to see that over the next couple of years too.
And it's funny, 2 years ago we were talking about projects over and over and over again where it was, we've got to build community spaces for people to be able to go and work and do all this and do that. We're seeing the shift again.
Yeah.
People want to go back to work.
Yep.
Thank God. Go back to work. Get out of the house. Go do something, right?
Yep.
It's, we were literally taking away units to create indoor working spaces. Now, we've got to add density. We've got to add people. We've got to add, that space for people to live because there's just a shortage.
Yep.
We say that, and it's so ridiculous that we're saying there's a shortage in housing when we know that vacancy rates are down, right? We're probably 2.5% to 3% down from where we were pre-COVID.
Yeah, absolutely.
In most marketplaces, we're still seeing projects right now that are almost 40% below where they were pre-COVID. That's insane.
Yep.
It's insane because when the moratorium ended, they just had to boot everyone.
Yeah.
They couldn't pay. But we're starting to come back. We're starting to see that excitement come back. One of the things that we're seeing is, in that living room space, that bathroom space, we want more. We're talking about LED. We're talking about, one of the things that is you could talk about a little bit, and I'd love you too, is that government money, that subsidy money for making sustainable energy, right?
Yeah.
We know that in Virginia, they're giving money to apartments to go green. And what that means is switching to energy efficient lights, the LED packages, water conservation programs, all of those things that make it just a little bit of difference in the environment.
Absolutely.
Are making that, and they're getting money for it.
Yep.
So, that's a big switch. So it's an area, and how does that determination get made? Because the money's there, but it's not great money, but it's money.
Yeah.
How does that determination get made to go green?
That's a great question. I can't really answer the determination of it, but one thing I can say though is a lot of owners, there's a lot of benefits, right? You do that, you look at your bottom line, your NOI, your expenses on utilities, efficiency, that is a huge expense, and a lot of people miss that in the pro forma when doing it because they don't realize what happens if undiscovered leak, whatever have you,
Right.
happens all the time. So the factor and the benefit of going to green, how much you can save, how much the owners save, how much more money in their pocket. I mean, that alone is probably the best reason to do that.
Yeah, it's funny you mentioned something in there that I wanted to get to at some point, like even changing the valves in this kitchen, right? And that change, that little tweak, how much that saves in the end. Because literally, as we're talking about these projects, we're talking about the owners. They're like, so it's $1,500 too much per unit, can't do it. Over the life, that's $150,000 over a 100-unit project. I can't do it. I'm not doing it. But the truth is what they're not calculating is their own performance in the background.
Exactly.
I think that's a mistake that they make. So as we talk about this podcast and we talk about building out ways to add value to our marketplace, and talk about these issues, these transitions, these are things we're going to talk about. We want to help them know how to avoid these mistakes. So as we go forward, and you're going to see in our next episode that you and I are going to do in a couple weeks, we're going to talk about that. We're going to talk about the mistakes that get made during the DD process. And I think that people are going to be shocked when the simplest things make the most impact over time.
Absolutely right.
Listen, I'm excited for it. I really appreciate you coming in.
Yeah,
I hope this was valuable to our guests. We're going to start really getting dialed in here on the granular aspects of what we do over time. But check us out. Follow us back next month. We're ready to go. Thanks, guys. Appreciate it.
Thank you. Appreciate it having me.
Thanks for listening to this month's episode. Join us on LinkedIn for the discussion we're having using hashtag determining your project needs. And next month, look out for our episode with Mike Bill as we discuss how to hire for scale. Thanks for listening.